Here's how not to blow up your portfolio and something I wish somebody would have told me when I started investing. Diversify your portfolio. Here are all the stock market sectors. You want to have some stocks from each sector like this to protect your portfolio.
Any reason why your portfolio is so concentrated in a few companies? Because I want to make a fuck ton of money. That's the reason. I do not believe in diversification. Flat out, all right? Especially if you're my age. I subscribe to a different approach.
Several times I had 75% of my net worth in one situation.
The whole secret of investment is to find places where it's safe and wise to non-diversify. It's just that simple. Diversification is for the know-nothing investor. It's not for the professional.
With excessive diversification, you are guaranteeing mediocre results. For most people, that's totally fine, right? They don't want to pick stocks. And in that case, just go in an index fund. They'll give you all the diversification you'll ever need. When I find a stock with a ton of upside and little downside risk, I go in heavy. All right? That's what I do. Peace.
Most financial advisors would recommend 15 to 20 stocks in your portfolio. I think that's a good amount. And as far as should you have the same percentage? No. And the reason is going to be different for every investor. For example, you might be a prudent, cautious investor who would prefer to have slow, steady, reliable dividend stocks. So you might have more, a higher percentage of the shares in your portfolio will be designated to dividend paying stocks. On the other hand, you might like risk and you might see potential in growth stocks. So you might want a portfolio that's heavier in growth stocks, but still have some cushion and protection in the form of the dividend stocks. And what about ETFs? Broad market or just regular old index funds, mutual funds, gold, crypto? The point is there's no one size fits all.
Hi, so there's no one right answer to your question because it depends on your own personal financial situation. But for myself personally, I ensure that I have an emergency fund prepared. I ensure that I'm only investing for the long term. So any money that I need in the short term, I would not invest. And beyond that, I invest as much as possible to really take advantage of compounding growth over time. And as to how many stocks or ETF you should have in your portfolio, again, this is a personal preference. For myself, I try to have 10 to 15 because I find that if I go beyond that, then I would not be able to really keep track of all the investments in my portfolio. But I do know of full-time investors who have like 30, 40 stocks in their portfolio as well, and they are also doing really well and beating the market every single year as well. So there's no one right answer. There are people who have like just 5 stocks in their portfolio as well. So find what works for you, find what kind of strategy and approach really works for you. And you can also check out the video I've done on my YouTube as well, where I explain the number of stocks in my portfolio and how to really structure it as well. So yeah, hopefully that helps.
We think diversification is, as practiced generally, makes very little sense for anyone that knows what they're doing. Diversification is a protection against ignorance. I mean, if you want to make sure that nothing bad happens to you relative to the market, you own everything. There's nothing wrong with that. I mean, that is a perfectly sound approach for somebody who does not feel they know how to analyze businesses. If you know how to analyze businesses and value businesses, it's crazy to own 50 stocks or 40 stocks or 30 stocks probably, because there aren't that many wonderful businesses that are understandable to a single human being in all likelihood. And
so for a bunch of reasons, I mean, I've always had the view that, why not own the best 10 or 11 investments as opposed to ideas 12 through 25 or 12 through 100, which is more typical. And I think there are very few great investments at any one time. So the ability to concentrate is an enormously valuable asset of a strategy. The problem with it, it depends on what your business model is. But if you want to make high rates of return over a long period of time, it's hard to do that being very diversified. I mean, if you look through the Forbes 400, wealthiest people in the world, most of them made their fortune in one business or a portfolio of 2 businesses. Very few made it in a portfolio of 100.
Hey guys, welcome back to my YouTube channel. In this video, I'm going to answer the question, how many stocks should I own within my portfolio, or should you own within your portfolio? It's a very important question within the investment community. So some investors don't think it's a good idea to own too many stocks because when you do, you can over diversify basically, and then it's harder to track all your investments and stay on top of them. Where on the other hand, other people think that if you own too few stocks, if you don't own enough stocks, then you can make a lot of mistakes and that can blow up your portfolio. So that's not good either. So in my portfolio, I currently own 5 stocks. So I'm very heavily concentrated and I'm comfortable with that. I'm okay with it. So I actually like to take majority of my money and put it in my highest conviction ideas. Okay, so most people, I think that might be a little bit too much. And that's fine. You know, you just got to be comfortable what you want to do, and then just know yourself as an investor. So the other thing is, I heard some good information from Kevin O'Leary the other day from Shark Tank, and what he said for the average investor, it's good to at least own 20 stocks. So never put more than 5% into one stock, and never put more than 20% into one industry or one sector. So there's basically 11 sectors in the market, like technology, healthcare, utilities, that sort of thing. But what he's saying is just be a little bit more diversified, or say you have 40 stocks and you put 2.5% in each stock. So that's another way to look at it. So I do like that advice for the average investor. I think that's a pretty safe way to go.
So what I'm going to do now is put a chart up on the screen that shows basically the benefits of diversification decay very quickly after you reach a certain amount of stocks in your portfolio. So on the bottom, you can see from 0 to 100, that's the number of stocks in a portfolio. And then on the left side, you can see from 10 to 35, that's the standard deviation of returns. Okay, so basically the two things you need to see here is that once you hit 10 stocks in your portfolio, you've almost diversified more than half of owning, say, 100 stocks. And once you get to about 20 to 25 stocks in your portfolio, you've basically matched the same result of diversification as you would once you have 100 shares in your portfolio. So it's very interesting information here, and I was pretty surprised when I saw it. So, you know, at the end of the day, what it's showing is if you have 25 stocks in your portfolio, you're basically fully diversified.